Everyone knows the last few years, the real estate market has been absolutely on fire. And while the luxury market can kind of have its own specific way of behaving, it was not immune to the craziness. And while many wanted to believe that this was going to last forever, these markets are always changing and evolving. Today's luxury buyers are experiencing some of the same struggles as other consumers. However, some of the factors that affect the luxury market are a bit different. So let's take a look at some of the things that are influencing the decisions of today's luxury buyers. And let me know in the comments down below if you agree or disagree with any of the things that I'm talking about, and if you think I missed anything. One of the first factors that can have an effect on the luxury market are economic concerns. And in a Forbes article, they reported this. Nearly 2/3 of surveyed brokers say that economic concerns are one of the top 3 factors impacting their markets in 2023. This means that things like rising inflation, recession fears, equity portfolio depreciation, political instability, and inventory constraints are causing some buyers to pause. Now, the overall demand for all types of housing in every market is down from the last 2 years, but let's face it, the last 2 years were anything but normal. What we do know is that we will see fewer homes sold in total in 2023. Now, lack of inventory is another big issue that many top markets are facing right now. Lack of good inventory remains a major problem, and this has been going on since the 2008 global financial crisis. The scarcity of luxury homes for sale will continue to restrict potential buyers and sellers, which puts things in somewhat of a stalemate, which leads back to what I just said, because we will see fewer homes sold overall in 2023, including in the luxury market. At the end of 2020, according to Freddie Mac, we were short 3.8 million units of housing. And this shortage has just grown. Now, I have many buyers right now looking to buy a home, either primary residence or a second home, and we are having a really hard time finding anything for them to buy. And these buyers range anywhere from $1 million to well over $5 million. Yes, there are homes on the market, but many of them just don't fit what they're looking for. Now, I know for some, it's hard to wrap their head around this, especially when it comes to luxury homes, because many look at the luxury home market and they see a lot of homes on the market. And one would think, surely you can find one that would suit you. But the reality is, like I said earlier, there are not as many really good homes on the market right now. There are homes on the market, but some of them have become stale. They need to be updated. They're overpriced and the seller is just not realistic. There are a lot of other factors. So let's take a look at some of the specific data when it comes to the Phoenix Scottsdale market, which should be kind of eye-opening because if you watch any of the other Crash Bro videos, apparently Phoenix is going down in flames, especially because they all say that our inventory is surging. So let's take a look and see if that's really true. Okay, so I wanted to jump into the Cromford report because this gives us some amazing data that is going to demonstrate kind of what we just talked about. So this is showing you active listings per week. So this shows you where we are right now. We have about 1,866 homes that just came on the market just this past week, and this is just luxury. Now, I want to just point something out. So again, talking about the Crash Bros, if you're watching any of those videos where they all want to say that our inventory is surging and they'll call out Phoenix specifically for this, this is not a surge right here. This right here, this is our surge. So I just want to say this. They're not wrong necessarily. They're just late. So this has already happened. The surge has already happened. We're now kind of flattening and we're seeing a more stable inventory come on the market. Nothing crazy going up, nothing crazy going down. We're just seeing a normal inventory just kind of come on the market. But here's the really interesting thing. So this is just 2023. This is 2020. This is 2022. And the blue line down here is 2021. So again, these are those last few years that were really not normal. So let's add some really normal years in here. So here's 2019 and 2018. So this is going to show you what normal, a little bit more normal weekly active listings coming to the market looks like. And so 2019, this is the green line right here. So we're actually under 2019. There were more homes coming on the market in 2019 than there are right now. And then 2018 was right when they started doing this chart. So that's why we only have a little bit of data here. But again, so that was a little bit lower. So again, we're not the top, but we're not the lowest. So we're right there, right in the middle. So that's just our active listings coming on the market. Okay, so now let's take a look at the listings under contract as compared to what we just saw as listings coming on the market. So that was showing us how many listings came on the market every week. This is showing us how many listings are coming off the market every week. So this week we've had 835 homes come off the market. Again, this is just luxury. Okay, so this shows us this is 2023, this is 2021, and this is 2022. But let's add some context in here because we just talked about these last 2 years were not normal. So let's add a couple other years in here. So 2020, 2019, and 2018. So this shows you what a few other normal years look like in the luxury market when it comes to homes coming off the market. So this is 2020. So again, this is a wonky year, right? So this was COVID. We saw this big dip and then this big surge here. And then it continued in 2021, 2022. And then we saw that shifting in 2022. So here's 2019. This was before all of that. So you can kind of see, again, this is normal for our market. This is showing a little bit of the seasonality that we see in our luxury market, where we have a lot of homes kind of go under contract. Then we start to kind of wane when we get into the summer months. And then we kind of pick back up when we see like October, November. But again, this shows you, this is far from being completely depressed in the market. This is far from being just no demand at all. We do have demand. It's just a little bit different. But again, the last 2 years we saw not normal. So this chart talks about our month supply. Again, this is showing just luxury. And you can see right here, our current month supply is 3.6 months. And you can see that it's actually declined from January. January, we kind of hit a peak. We were at 6.4 months of supply in that luxury market, and we're now down to 3.6. But you can see, again, these were those non-normal years with 1.4, 1.2. These are more normal years. So here we are in April at 3.6. This shows you kind of the seasonality again, too, when we see homes come on the market and when they come off the market. So here is, it jumps around, sorry. Hang with me. April, right? 6.1. This was in 2020. Again, that was the wonky year. Here we are just before that, April, 8.4. In 2018, we were at 9.1. I mean, here's a high. This was in January of 2015, 25.9 months of inventory on the market. So again, the luxury market doesn't really follow that above 6 months and it's a buyer's market, below 6 months at the seller's market. Our month supply is usually a lot higher in the luxury market when it comes to looking at that as a metric. But 3.6 is still really low when it comes to our overall inventory. And let's just put this into perspective. So again, that's just the luxury market. So let's take a look at where we are overall in the market. This is all price points. So right now, overall in the market, we have 1.8 month supply on the market. This was that surge that we talked about just a little bit ago. And the highest we saw was 3.8. So 3.8 in the overall market, and currently right now in the luxury market, we're 3.6. And in the luxury market, that is still really low. So I hope that demonstrated what that lack of inventory actually looks like. And it is not just happening here in the Phoenix Scottsdale market. I know it's happening across the country because I've spoken to many other real estate agents about it. So sorry, Crash Bros, your inventory exploding doesn't really hold water. So another thing that can affect the whole buying power and the behavior of luxury home buyers is political instability. And this can potentially lead to different fluctuations in the overall luxury housing market. In that same article in Forbes, 24% of surveyed members expect political instability to be one of the top 3 factors negatively impacting their luxury property market in 2023, while 17% expect a positive impact. Now, the 17% of those surveyed that expect political instability to have a positive effect on their overall market are citing the potential for inbound migration and investment in their areas as a result of political instability where they are coming from. This is what we have seen in the Phoenix Scottsdale market, with luxury buyers coming here to buy not only their primary residence, but potentially move their business here because they're coming from states with crazy high taxes, not only for property, but also for their business. And if you haven't heard, California just passed on April 1st their mansion tax. And this is affecting any homes that are higher than $5 million, and then an additional tax on top of that for any home sold over $10 million. We are seeing people move here from states like that and other states that just are tired of dealing with that. I hear about the taxes in other states from the buyers that I help move here all the time. And if you are one of those looking to move, I am fortunate enough to have amazing relationships with agents across the United States. So even if you don't live in the Phoenix Scottsdale market, but you need help finding a great real estate agent to help you wherever it is that you want to move, check out that pinned comment down below. Reach out to me, email me, give me a call, and I will personally find the best real estate agent for you. Now, something else that is continuing to have a positive impact on the luxury housing market is remote work, which is still going to continue in 2023 and most think a lot longer. According to more than a third of Forbes Global Properties surveyed members, remote working is one of the most important factors impacting their luxury markets in 2023. Wealthy buyers will continue to leave denser, more populated areas in favor of more private, spacious, sustainable, and health-conscious surroundings. The trend of working from home or even partially working from home and the drive to find a higher quality of living outside of the major metropolitan areas is not fading anytime soon. Because of this, we have started to see some areas that maybe didn't have a lot of luxury homes now begin to have a growing luxury home market. And this is giving that luxury buyer a lot more options. As the world continues to open past the pandemic era restrictions, many see an expected change in overseas investment and feel the number of foreign investors would positively affect their housing market. From that same Forbes article, 31% of those surveyed expect overseas buyers to be one of the top 3 factors to positively impact their luxury property market in 2023. International real estate transactions are back on the rise, and foreign buyers are eyeing the US as a possible place to buy a home. And some Americans are targeting overseas areas to buy a home. But one of the biggest things that will affect the overall luxury housing market are corporate profits. This graph shows where we have been and where we are. The corporate profits were just released again on March 30th, and they are down a little from the previous release, but not drastically. This is one of the biggest things to watch when it comes to the overall health of the luxury housing market. And if anything is going to have a massive impact on the housing market, it will be corporate profits. Now, if you like this video, make sure you take a look at these. As always, I thank you for watching, and I'll see you next time.